So from last class, we been like do small forex overview. We talked about just the introduction, although it was long, sha. To start a quick recap, to do small recap about the previous class, we talked about in reality, like market reality, why people they like the reality of forex, what forex truly is. Um, and we define forex as what they call them, foreign exchange, the art of giving and receiving, say two different currencies that are not like from two different countries in a simple way. Like as long as it involves buying and selling of different currency, that's called forex trading. So forex trading, as we talk about, say na like forex trading na speculation on the change of value of different currencies of one currency in relative to another. Na im be forex trading. And we gave example with Euro USD. When I talk about Euro USD, see wetin I mean. Something like this, Euro USD. And we talked about Euro USD. EU, EUR stands for Euro, European this thing, currency. Then USD stands for United States dollar. So there are two different currency from two different countries. We gave that as an example. Then we talked about what forex is not. We thought say forex no be gambling. Forex no be quick money, like get rich quick scheme. Like no be something where you go just jump in with hope say overnight you go make money. Forex no be guessing game, and forex no be binary wey be say you fit just decide whether na up the trend dey go or na down, whether na up for market to go up or come down. Then we discuss say forex trading na skill-based financial activity, say e dey dependent on probability, risk management, and discipline. We talk say forex na a long-term learning process and things like that. Then we discussed why most people fail in forex. We Then I remember talking about forex being designed to reward patience and punish emotion. Then we discuss say reasons why most traders fail now because of over leveraging, poor risk management, emotional trading, lack of market understanding. Then I gave you a quick reality check. Say out of 100 people will learn forex, less than 10 people they become consistently profitable. It get difference between profitability and consistently profitable. Both of them are different things. You go from being profitable to consistently being profitable. Most people are profitable because they make money in forex, but being consistently profitable means say at each month of the year you go at least boost of a certain figure. No matter how bad the month dey, you must come out like that. No, if like month bad oh, at least you go make $1. Month bad oh, you go make $1. You fit make above $1 oh, but like no matter how bad the month is, you go actually make money. That's being consistently profitable. Each month you come out profitable. We are not talking about weeks. Then we talk how money moves in the market. Then I told you people that forest market is the biggest and largest financial institution, abi financial market. And I tell una say over 6 trillion $6 trillion is traded every day. Over $6 trillion is traded every day in the world. So that means no financial market big pass forest. No financial market where you fit trade, where you fit see where they trade over 6 trillion from there. So that alone don't show you say forex trading no be this thing, no be just something where you just take for granted. If they reward, e go reward you, and at same point, e go still humble you. That's just the reality of forex. Then again, we talked about then I told you people that forex operates 24 hours a day, 5 days in a week. Forex trading, like forex alone, starts from Monday and ends on Friday at exactly 12 o'clock. Then we discussed about all these things, not just overview, like recap from last class. We never actually start class. We talked why currency moves. Then we talked about interest rates, inflation, employment data, political stability, global risk sentiment, institutional demand and supply. These are why, like, reasons why currencies move. Without economic performance, without the economy, interest rates, inflation, employment data, political stability, global risk sentiment, and rest, forest no dey move. The key determinant of why forest moves na supply and demand. That's just the foundation. Then we talked about market participants and institutional dominance. Then I told you people that, like, we get three market participants, like three core market participants. We get the central banks, the institutional traders, and then we get the retail traders. That's me and you. Then inside there, I told you, like, the main purpose, like the main aim of the central bank is to control interest rates, control supply, money supply, moderate this thing, moderate mark the entire shape, or what they call them, either moderate the actions and reshape and to reshape trends of markets. Then we talked about institutional traders like the hedge bank, the banks, the investment firm. And then I told you, like, the key function is to, like, to they need liquidity to enter the market. So their own institutional traders, like, they engineer liquidity. Then we, the forex trade, like the retail traders, if you like, they trade with $100,000, they trade with $1 million. We, all of us, na retail trader. We no even get safe for the market, because either we enter late, or we enter late and we follow price after it don't already move. Then again, I told you people that, like, we, the retail traders, now we, they provide liquidity. And then what is liquidity? Liquidity is actually fuel that pumps the market. Like, where liquidity now, like fuel where they draw magnets. Liquidity now magnets or fuel. Liquidity they draw price, like they draw price to certain points, and liquidity, once price clear liquidity, it begin go to the normal direction when it's supposed to go. Let's take for example, say liquidity, we get sell side liquidity, we get sell side liquidity, SSL, we get sell side liquidity, and we get buy side liquidity. These are, like, just the major type liquidity, but they are, I told you, like, this liquidity get, like, a broader topic on its own. We go talk about them, but no be now. Then if price clear buy side liquidity, then price go clear sell side liquidity. If price first clear sell side liquidity, price go clear buy side liquidity. Now so liquidity they work. Then I told you, like, I told you the structure of at which I intend on teaching you people this class. And I talked about um to teach you how the market works, build strong foundation, develop market understanding, and all those kind of things. Then I told you, like, if your aim now to make quick money, say I know they interest, like, I know they involve, I know if you guarantee you quick success. I told you that this class probability be say it will take us 6 months. Reason being that I know they see all of una regularly, and I won't take things easily, slow. So everybody go follow at the pace. Everybody go understand. That's why like I want to take it easy. If you dey find signal, we go still share signal. Like we go still like I will dey do market recap. But that time now when everybody go don get market on structure, everybody go don understand market structure. Then we go dey do market recap. I drop signal. If you play out, everybody benefits. If you no play out, all of us lose. And that's where we talked about risk management. We talked about risk management too. So all these things we discussed them for previous class. Then all of them go lead us to discussing forex trading now. Like make we discuss about forex as a whole. Then we start with I don't give an overview of forex. I told you people to download MT5, MetaTrader 5, MetaTrader 4. I told you like we use all those apps. Why what those apps are used for? I told you to download MetaTrader 5 for executing trades, trading view for analysis. Then I told you again to download what is it called?
Trading
Um
view.
broker. This broker SNES too. So all those things sum up to the only thing with what we talk about. Then today we we go talk about forex as a whole, basic concepts. So today we will just discuss basic concepts. So we will discuss basic concepts of forex. Wait, make I share my screen. No, just give me small time, no vex. No vex. Oh. Pardon me. You dey see, una dey see am.
Your face I dey see, guy.
Na my face you dey see.
Mm.
Na my face you dey see. Na my face. I no want make you see my face.
Yeah, now fix your shit. That's not what your friend is.
So don't do the recap. Wait, I dey try share this thing. Make we go trading view.
Okay.
Don't forget where they did this. Okay, I don't see. I dey come. I want. Wait, the common. I don't see am.
No,
Eh?
no,
Never
no,
dey see
no.
my.
Yes. We don't dey see am.
Okay, yes, yes, I understand. No verse.
Okay. So today we will talk about a lot of things. But like now, just quick overview. We will just do quick overview. Talk about basic stuff too. We will talk about forex basics. Forex basics today. No verse. Make I take my no verse. I want check my trade. I beg. No verse. I beg.
Wow.
Don't be don't be angry at me. Okay. So we'll talk about make I use Bitcoin. Do the analysis. Do the so we'll talk about forex. Now this year, then let the class begin.
Yes, sir.
If you come inside again, we'll get issue. So from our previous class, which I tell now say before Forex, like I don't know
Exchange
if
of
like
currency.
you understand. Yeah,
Exchange of currency.
exactly. Who be that person we talk now?
Wale.
Guy, relax now. You know be beginner.
Me, I be beginner. Oh.
No, me and you go the same class. Relax first. After another person, I beg.
Change,
From your own
change in value of money.
understanding. Exactly, but
Uh,
you can understand. Say everything what they teach you, you need them off head. They know they cram forex. You
all
get
right.
you
Okay.
need you need get those knowledge off your head to the point where we say if person ask you like wetin be this, you go know am. You no need long talk. You no need make person dey tell you say this thing na this thing, make dem no confuse you and all those things. So there again, wait. Then we go talk about wetin they call am terms in forex trading. You dey hear me?
Yeah, yeah.
We go talk about terms in forex trading. Today we go talk about PEEP. I dey come.
Eh?
Today we go talk na the same abi.
Yes. Tips.
So sorry, I check something. I want check if it dey work. So we're gonna talk about understanding currency pairs. But first, make we talk about forex. So forex trading, like I told you, is the buying and it just deals with buying and selling of different currency. Then under forex trading, we get branches of forex. We get branches of forex. There are three branches of forex. I will explain everything. Make I first type. We get the risk management. We get the trade management. We pass to. We get money management. We get technical. Then we get the psychology. So it's actually past three. So these are the branches of Forex. No, we just discuss Forex as a whole. So with that, we'll end the discussion of Forex trading. Like I said earlier, everything what they teach you, you need know of heart. The point where be say if person ask you tomorrow, what be this thing? You go fit tell them, yes, this thing, na this thing, this thing, na this thing. So, like I was saying, we get different branches of Forex. We get the risk management, we get the trade management, we get the money management, we get the technicals, and we get the psychology. Most people here, when they learn Forex, they skip risk management, they skip trade management, they skip money management, they skip psychology, especially psychology. People just want to know the technicals. That's how to do analysis. May you know if your analysis they go up or they go down, or your charts they blue or your charts they white. Like now basically what is most people won't know be that. So talking about risk management covers the money you are willing to stake. Make we call them stake. The money you are willing to lose. Make we put them like that. The money you are willing to let go. Where we say if you lose that money on a trade, it no go affect your mental health. E no go make you begin think say forex na scam. That money no go change your view on forex. That is wetin dey call am. That covers risk management. When we talk of trade management, we talk of how you dey feel before you enter trade. How you dey feel when you don enter trade, and how you dey feel when the trade dey go on. Although some this thing dey under psychology too, but e dey under risk management with that. No, sorry, na trade management with that. If your trade, how you go take place your stop loss and where your take profit go be. Wetin be stop loss? Stop loss na wetin dey make you determine amount wey you go lose for trade. TP na the money wey you go win if your trade go your direction. Na wetin dem dey call stop loss and TP. I no go type anything, but like this class will be recorded for reference. So in case if you want go back to the class, you go actually go back to the class easily. Then money management. Now it covers what you do with the money you make from forex. How you take they keep the money, whether they invest the money. All these things, as we dey progress, we will talk about all of them. But those they give you the branches of forex. What you they do with the money where they make from forex, where they put the money. So you no be today now you make money, you leave them for your account, you blow them. If you make so amount, you they withdraw them. What you use the money they do. Whether they use the money they do dorime, whether the money they use them, they invest them. So if like get another money, go fit fund your account easily. All of them they under money management. Technicals. Now about strategy. When we talk of technicals, we talk about your strategy. How you take the handle, like how you take the analyze your trade to determine the direction of the trend. All of them they under technicals. Then psychology deals with everything that has to do with your feelings, your emotion. Your emotion when you are on trade, your emotion while on trade, your emotion after trade. How you they react, how you they treat people when you have a losing streak, how you they treat people when you have a winning streak. Like all those things they under psychology. You now understand?
Yes. So far, so
If
good.
you get what you no understand, Tell me. That being said, we will discuss currency. You dey hear me? Now dey hear me?
Yes.
Yes, sir.
On that. Yeah, I know they call me sir. Understanding currency pair. So anybody get idea? Just tell me wetin currency mean to you. Like if person ask you wetin be currency, wetin you understand by the word currency? Anybody?
Fit talk.
Currency. Oh, person they talk, bro.
No, you talk. You talk.
Talk
So
now.
I know.
According to my own understanding, currency, like money.
Yeah.
According to my own understanding,
Okay.
currency, money.
Yeah. Currency na money. Then when it comes to forex trading, currency is traded in pairs. In forex trading, currencies are traded in pairs. Wetin I mean by this one? You dey see the full definition.
No, no, no. Uh-huh.
You don't dey see.
Yes.
So
Yes.
currencies are traded in pairs. Why? Why this thing happens is because you are buying one currency and you are selling the other one at the same time simultaneously. We talked about this thing. Why is because you are buying one currency and selling another one simultaneously. That means at the same time. My screen small, so most times una no go dey see am.
Yeah.
Wait, make I don dey see am now.
Yes.
So understanding currency pairs. In forex trading, currencies are traded in pairs. Why? Because you are buying one currency and selling the other one. Example wey we go use. One example wey we go use well well na this Euro USD. Euro USD. Euro USD. Wetin dis thing mean be say you dey buy, you are buying euro and you are selling dollar. That's USD. That's the meaning of Euro USD. Anytime wey you see Euro USD, wetin e mean be say you dey buy euro, you dey buy the first one and you dey sell the second one. Na wetin e mean. In forex trading, currencies are traded in pairs because you are buying one currency and you are selling another one simultaneously. Then example, Euro USD. This mean like I can't give you this example. Say why this thing dey like this because you dey buy euro and you dey sell USD. That's why it is like this. Then under currency, we get wetin we dey call base currencies and quote currency. Wetin I call am? base currency and quote currency. Why we get base currency and quote currency? Because every currency get two parts. Because we dey sell one, we dey buy one. So every currency pair get two parts. Euro USD for this example na the first currency. USD dollar na the second this thing. Euro na the first one. That's this euro. The other one na dollar. United States dollar. So this is actually what the thing means. United States dollar and euro. Euro na Spanish people they use euro. Then dollar na United States they use them. Although there are other types of dollar. Forex trading no fee end for this life, no matter what happen till infinity. Why? Because every country for this life no fee use one currency. Even if what they call them, everybody decide say they won't use dollar as like means of exchange. Say make everybody use dollar. China no go use dollar. What they call them, Russia no agree use dollar. Because all these people like they get their own, like they're stubborn. Well. I'm just giving an example. Even Nigeria no agree use dollar. Although our government feel like I said, but like forex trading no fee end because everybody no fee use the same currency. Then talking about the base and quote currency. Base and quote currency. So in forex, we get what they call base and quote currency. Talking about the base and quote currency, then I said that every pair has two parts, the first and the second one. And the first part of every pair, nine that they call base currency. Sorry, na phone I dey use, so I go slow. So every currency get two parts. We get the base. Every currency pair gets two parts. We get the base currency and we get the quote currency. The base currency of every pair na the first currency, while the quote currency na the second currency. Example, Euro USD. Inside this Euro USD now, wetin they call am? And they come. Inside this Euro USD now, the base currency na this euro. You dey hear me? Una understand?
Yeah.
Then the base currency na this euro, because this euro now na the first currency. Then this USD na the quote currency. So in each pair, any pair where you see for this life, BTC USD, the base currency na the BTC, the first one. The quote currency na the USD. Why? And why e dey like this? Because this thing they tell us how much of quote currency we need to buy one unit of the base currency. That's just why it is like this. For most of you, they wonder. So price they tell us how much currency we need of this of the base currency to buy how much of the quote currency is needed to buy 1 unit of the base currency. For example, if this Euro USD now, no vex say we dey use this Euro USD well. If this Euro USD equals 1.100, wetin this thing mean be say if this Euro USD equals 1.100, wetin we mean be say this one euro, how much 1 euro equals to this 1.1000. Now wetin e just mean? Na im be say for every €1, you need $1.100, $1.1 if you approximate am, to buy €1. Una understand?
Yes.
If
1 euro.
if you no understand, tell me. All these things go actually dey simple once you start to trade. But for now, just like the follow up small small.
All right.
We dey try make we understand currency pair. Then we said currencies in forex is traded in pairs because you are buying one and selling the other one. Then we gave example with Euro USD. Then we talked about base currencies and quote currencies. Every pair has two parts. We get the first part and the second part. That's two pairs. Every pair get two parts. We get the first currency and the second currency. And we talk say the first currency is the base currency. Then the second currency is the quote currency. Now grab that part.
Sure.
If you don't understand, let me know. Then, having said that, we go enter buying and selling. Buying and selling. For Forex, when you hear long, we mean buy. When you hear short, we mean sell. So sometimes you will hear say person will just come say I'm longing Euro USD. Wetin the person they try talk say he dey buy Euro USD. If the person say I'm shorting Euro USD, it means say he dey sell Euro USD. When you buy currency, like when you buy when you buy for Forex, wetin you believe say the base currency go strong past the quote currency. When you sell, you mean say the base currency go weaken, then the quote currency go strong. Just
Come again, Avec.
when you
No.
buy for Forex, you dey insinuate say the base currency go strong pass the quote currency. If you sell, the base currency go weaken, then the quote currency go strong. Buying, base currency go strong, vice versa. Selling, quote currency go strong. If one strong, one go weak. If one weak, one go strong. Make we take Euro USD for example. If you buy Euro USD, wetin you dey expect be say make Euro strong Like it's make euro go up, make dollar fall down. Now when you buy euro USD, but when you sell euro USD, you want make euro fall, make dollar rise. You understand that, please?
Yes.
Then we go move over to we will move over to types of currency. Types of currency pair. I dey try as much as I can make I no speak grammar. So make I no speak grammar so everybody go understand. We get a major currency, we get minor currency, we get exotic pairs. Abi? We get exotic pairs and we get crosses. Although they know they teach these crosses, we just get they will tell you say we get wetin they call them two three major type of currency: the base currency, the minor currency, sorry, the major currency, the minor currency, and the exotic currency, exotic pairs. Then major currency. What are the major currency? Major currency are currencies that are most traded, and they get high volatility, low spread, and then they include USD. Whether USD they start them or USD they end them, that is called major currency. So major currency pairs are most traded. I beg now from my head though, just in case I know right and where I spell something wrong. Call me out though, I beg, make you no come go type rubbish.
Okay.
So major currency are the most traded. They get low spread. I will teach you now what be spread later. Always include USD. It no matter whether the USD they include them for the end, for the beginning, or for the center. Major currency they always include USD. The spread they low, like they get tight spread, tighter than other currency pairs. Then they always include USD. Example: Euro USD, USD, GBP, USD, USD, JPY, USD, CHF, AUD, USD. Will I say now only these five? AUD, USD, USD, JPY, USD, CHF, the Euro, USD. So these are the major currencies we have. Again, you see as I take dey write all this currency pair, Euro, USD. They don't get anything like USD, Euro. You know why?
No.
And they come.
Okay.
And they come. And they try respond to something abeg. Like I was saying, sorry, currency pairs are written in fixed orders. In fixed order, like na international standard. Example, Euro USD. You no get anything like USD Euro. It must always be Euro USD. The base currency remains the same. The quote currency remains the same. It is globally standard. And the body wey standardize am, e be like say na I something, ISO, or I no really remember, but like ISO or something like that. That's the body that regulates the way currencies are written. So Euro USD na Euro USD. You no get anything like USD Euro. Wetin I mean by USD Euro? This thing now na the same thing. We no fit write am like this. We no fit write am as USD Euro. USD Euro. Una dey hear? This thing now dey wrong.
Okay.
It is always the same. Euro USD is Euro USD. Although all these major pairs get nickname, I no really know all their nicknames, sha. E don tey wey I learn the class. I no know all their nickname. The time wait make I know if I go remember this Euro USD. E dey very common. Kiwi. Kiwi na NZD USD. NZD USD still follow for here. But they call am Kiwi. Switzerland. Which one Switzerland? USD CHF na Swiss. Canadian dollar, USD CAD. All these things why they call na major currency. Why? Because they get USD. USD card na good. No. Na loonie or something. Then Euro USD na fiber. And Euro USD na like the most traded pair in the whole world. Euro USD na the most traded pair in the whole world. So that concludes the major pairs, types of currency pair. We get the major currency. We get the major currencies that are most traded, low spread, and always include USD. They are called major currency. Then we get minor currencies. Minor currency na any currency wey no include USD. Any currency wey they write wey be say you no see USD inside, then that is a minor currency. Example. eh, No USD involved. Example, we get the Euro GBP, we get the Euro AUD, we get the AUD We get the AUD, JPY, and stuffs. All these ones are they are the exotic, they are the minor pairs.
My,
Minor pairs are pairs that does not involve USD. Anytime we see any pair where USD no they involve, they are called the minor pairs. Then we get these exotic pairs. They are exotic pairs are, I want to explain them. One major one major currency plus
minor.
no, all these Nigeria currencies and stuff like that. But you just deal with currency where they know they trade. Make I just tell you the truth. Euro US
Okay.
exotic pairs just put them like currency where people know they trade. Brokers know they regulate them because they get high spreads and they are volatile. Example USD ZAR. That ZAR na South African South African rand. Rand na waiting.
I don't know.
It's a very old age.
I swear. I don't stop here.
How old you?
Ma checker.
Call am again. Which you talk?
Na USD ZAR na South African rand na.
ZAR.
ZAR.
Okay, ZAU na be New Zealand.
No, I know they talk about New Zealand. They talk about South African rand.
Nah, yes,
USD
now ZAR.
ZAR. We
Nah,
get
ZAR.
USD NGN, Nigerian currency. USD NGN. We get Euro. Wetin be Turkey currency. TRY, something like that. All these are exotic pairs. Why? Why they know they
Now
trade these
TRY.
exotic pairs? Why they know they trade these exotic pairs? Because they highly volatile. One, they spread the wide way. Two, and they like they know they regulate them. Then these crosses. When you talk of crosses, we get currency crosses. We get JPY crosses. Any pair we get JPY. Now JPY crosses. You understand? Any pair we get JPY na crosses. They call them AUD JPY, USD JPY. Although most of them they for major pair, minor pair, and all of them, but they are crosses. So a quick recap: we talked of types of currency pairs, major currency pair. Major currency pairs are most traded. They get low spread, and they always include USD. And we gave few examples: Euro USD, GBP USD, USD JPY, USD CHF, AUD USD. Then we talked of the minor pairs. Any pair we no get USD na Euro na this thing minor pair. Then we talked about exotic pairs. They are not regulated by broker because they have very high spread, large spread. Example: USD against naira, USD against South African rand, euro against Turkish currency. You understand them?
Come again, Alex.
That I'm just like explaining them everything what I don't talk about for currency. Types of currency, like I said, we get
Major currency.
major, we get minor, and we get exotic. Remember, all these things you need get them for your head. You no need to look anywhere. You need know these things. There are basic things you need to know in Forex. There are some things you are not supposed to be taught. All these things now, you need them because these things now go build up all your Forex journey. So having explained currency, we don't know now we don't know everything about currency. I want to ask you a question. You, Idris, inside AUD JPY,
Uh,
AUD JPY,
yeah,
AUD JPY. Which one be the base currency and which one be the code currency?
AUD. AUD na the base currency, while JPY na the quote currency.
AUD na the
Base currency.
then the code currency na wetin?
JPY.
Exactly. So the first currency na the code base currency, while the second currency na the quote. The first currency na the base currency, while the second currency na the quote currency. And I tell you, say currency pairs in Forex move in pairs. Like they must be in pairs. The first one being the quote currency, the second one being the base currency. Apart from currency pairs, other things are traded in Forex. We dey trade metal. When we talk of metal, we talk of gold, silver, platinum, palladium, all of them. They trade them. We talk of the reefs. We talk of the DXY. We talk of stocks. We talk of the Nvidia and stuffs. Talk of the NQ and all those things. Those are things we trade aside currency. Then, having discussed everything about currency, then we go enter journey to Forex. From now henceforth, anything we dey teach now go dey related to wetin we go see for charts later. So if I were you, I would start paying rapt attention. We go start with pips. I know say some of una go dey look this thing and be like, when you go fit do am, you go fit small time e go easy for you. So pips is basically price movement. So just like human being, walk, like we take steps, we move from one place to another. That's the same way currency pairs move from one way to another. And the price and like price movements, those movements wey price dey make, na wetin we dey call pips. So pip is the smallest price movement of smallest movement of price. That's pips. Or basically, you can just say pips are what? They call them price movements.
Price movements.
So anytime when I talk pips, just know say I dey talk of price movements, like the smallest move of the market. Most pairs, their pips na 0.001. Other pairs, their pips na 0.01. Example. May we use Euro USD as example. Excuse me. Wait, I want to respond to it. So I said pips and price movement. They are the smallest price movements. Then in a simple term, to know the like what is pip. Pip is the fourth number after a decimal. That's the pip. For example, now make we use Euro USD now. Euro USD. We use the same number we used before 000. Then we say Euro USD now. That Euro USD e move. That Euro USD now go move, go up. Come turn to when e move go up, e go turn to 1.10005. E mean say this Euro USD don move 5 pips. How I take know say na 5 pips? If you minus this first one from this one, you will get 5, exactly 5. So pip is the fourth number after a decimal. That's pip. Then pipette is the fifth number, although we don't calculate pipette. In some pairs, we get high volatility. Pips fit be like the second number after a decimal. If the number, just know say the last number na the pip. If the pair na 0.001, the pip na 1. If the pair na 0.01, the pip na 1. If the pair na 0.0005, the pip na 5. So pip is the last number after a like the last number after a decimal. Example, see the decimal point. After this one now, this first one, the decimal, now this other one, 0.1. Any number wey dey after this point, now the decimal. So the last number here now, now 0. So this now 0 pip be this. The last number here now 5. Now the pip be that. So pip is the fourth number or the last number after a decimal.
All right.
We don't talk about why currency pairs they move now. We talk about inflation, we talk about interest rates, we talk about supply and demand, central bank decisions and stuffs. While every pair they different, some pair that we consider them highly volatile, like they move fast, and some pair they move slow. And as a beginner, if like you hear people they talk say you get no they trade good as a beginner. Why? Because gold moves so fast. Gold is very fast in movement. That's why beginners are advised not to trade any pair with the volatile. Again, that thing are just logic to some people. If you actually get strong foundation, you go actually trade, but don't trade gold as a beginner. To be honest, don't trade gold. You need enough market knowledge to trade gold. But like you can trade other pairs like JPP, JPY, USD, JPY, all those pairs we get high volatility. Some pairs they stable. They know they move too fast, like Euro USD. See the Euro USD for you. This one now. It is very stable. Like they move fast. They move, it taking time to move. avoid exotic pairs. When we start to do analysis, we go avoid exotic pairs because they are very volatile. So when I buy one currency, I dey do it, I dey sell another currency. That's just it. Then we talked about pips. Pips being the smallest movement of price. Pips na just the step wey price dey take. Then that will lead us to spread. Spread. But before we talk of spread, we will talk of bid and ask price. If you enter your MT5, you go see line like this. If you enter your MT5, for each price, you go see two line like this.
Yeah.
One na the ask price, and the down one na the bid. The up one na the ask price, the down one na the bid price. So wetin be bid price? Bid price na the amount. Sorry, make I drink water. Give me some time again. Sorry. So wetin be bid price? Bid price na the amount wey market, wey like seller dey willing. Sorry. Bid price na the amount wey like a trader is willing to
Lose.
buy. No, amount wey you dey willing to lose dey different. Bid price na the amount wey a trader dey willing to buy. Ask price na the amount wey a trader dey willing to sell. Wetin be broker? We talked about broker being make we stop this class for here before I will confuse you. We will talk about next class. We will talk about brokers. Talk about leverage. I been wan enter that topic now, but I remember say I no align am. I go talk about this bid and ask price, but I will first send PDF for the group. Then I will talk about this bid and ask price. Tell you how the bid and ask price dey work. Omo, this pair dey move. Oh. Thank God for my life. So we will talk about bid and ask price. I go tell you how price dey work, like how bid price dey work and ask price. I will talk about leverage. I go talk about everything about broker. Then we go open account, demo account for broker. That's the first step, the baby step. So that should be all for this class.
Thank you very much. We appreciate. I say thank you very much. We appreciate.
So till Sunday, I
Okay,
go
sir.
send the
Okay.
all right. Any question? Anybody
Yes,
get question?
yes.
Go on.
I get question. I beg, no be pertaining all this. I just want to ask one direct question. No vessel. Say na SLP you dey trade. Na the strategy wey you want to teach us be that.
Yes, but we go
Okay.
first teach them price action.
I understand. I just want man no go come go dey confuse my brain. I just want confirm something. I ask you.
We will teach SLP, but na price action we go first start.
Okay.
All right.
So the class
Any
you say na
question?
Thursday and Sunday abi how?
Thursday and Sunday, 9 p.m.
I no dey too small. I be get who dey busy like that. We no fit at least
Yes.
na 4 times a week.
See na 4 times a week.
If na 4 times a week, we fit dey do class or more any than this.
Clap for yourself. Clap for yourself, man, because I don't get any other thing I want to use my life. Do. Abi.
Well, these 2 times there.
Most people get what they do.
Yeah.
Like, people get what they do. If not like some of these things what they teach, I they like now if as I remember I tell they teach them because I no get this structure them what they call them.
In the get scheme of work.
No. The scheme of work na like topic by topic, but as I take talk before, inside those topic, you get some things so you need teach. Then if as I dey teach one, others go they come up. Now why I even stop this class because I be want start to dey teach them about leverage, about bid and ask price, about what they call them equity, all those basic concepts. But we will talk about all those things later. I be want talk about all those things. About margin level, about free margin, about what they call them balance, all those things. When you see and what see mean at that point, what I be want teach. But make I leave that one for next class. That's that for that. Make person not confuse himself. Because as I be want start am, I remember say nah like the thing just come my head. If like I get like structure we cover everything. If I like continue like if I follow the structure where I be create to SLP direct, most things we not go cover am. Because but I need like me when I get like strong foundation we go cover all these things. So now why it just
Nah,
be like this? No be to you. Some of them no even like never learn forex before. If not like like intermediate class, I for the rush everything because for intermediate class now mostly technical analysis, fundamental analysis, and speculation, speculative analysis, what say they call am, and this thing, psychology, trade management, how to calculate lot size, all those ones na beginner class. Like all those things, liquidity. Intermediate class now we go teach liquidity well. Although for beginner class we go just touch liquidity, but liquidity will cover everything for liquidity, like time-based liquidity, swing high, session liquidity, patterns, double bottom, like all those type of liquidity. Ehen. And this weak liquidity. And we will talk about inducements and we will talk about everything. So the thing like broad well. If for day easier for me, if like we no be beginner class, but if not as e dey beginner class, so they try as much as I can make I remember some things. And no be like I get notes. I no get any notes. I no get like as I would take they remember I'm structured. But next class I will try make I know like structure and come down. So I will dey follow them step by step. Anyone who I no cover, if he come up for future, we will talk about them. That's why I just want make it be.
okay, sir.
No, the answer me, Sam, my guy.
Okay.
All right. I
Will
will
be now.
send the class for this thing for the group. No problem.
Okay.
All right.
No.
Good night. Good night and take care.